To get started with the event. We'll begin in another few minutes. Before that, I have a few announcements to make. May I request all of y'all to please take your seats. I request all of y'all to keep your phones on silent mode. Make sure that all of y'all have kept your phones on the silent mode, both during the inaugural session as well as the panel discussions. Our dignitaries will soon be here and we'll get started with this morning. I'm so glad to have all of you all here. All right, as promised, let us get started with this beautiful morning. May I request all the dignitaries to join us for the lamp lighting ceremony. I request Mr. Kamlesh Chandra sir, Mr. Lav Chaturvedi sir, Mr. Sandeep Bhardwaj, Mr. Mrugank Paranjape sir, and Mr. Jyoti Prakash Gadia to please join us for the lamp lighting ceremony as we start the 15th Capital Market Summit by Asucham. Ladies and gentlemen, can we have a huge round of applause? Thanks to all our dignitaries. May I request all of you all to please pose together for a picture. Thank you so much. So ladies and gentlemen, we are done with the lamp lighting ceremony and we're all set to start this summit. I would like to thank our audience for being here on time. And thank you so much. We are grateful to have all of you all here. And we are grateful to have such esteemed guests here with us. So now it's time for me to call upon all our guests on the panel, starting with Mr. Kamlesh Chandra Varshne, whole-time member, Securities and Exchange Board of India. Ladies and gentlemen, let's welcome him with a huge round of applause. Next up, we have Mr. Lav Chaturvedi, Chairman, National Council on Capital Market and Investors Protection, Asucham, and ED and CEO, Reliance Securities. Ladies and gentlemen, put your hands together. Thank you, sir, for joining us. Next up, I would like to call upon Mr. Sandeep Bhardwaj, Co-Chairman, National Council on Capital Market, Asucham, and Chief Operating and Digital Officer, HDFC Securities Limited. Round of applause. Next up on the panel is Mr. Mrugank Paranjape, Chairman, National Council on Commodity Markets, Asucham, and former MD and Chief Executive Officer, MCX and NEML. Round of applause, ladies and gentlemen. Last but not the least, we have Mr. Jyoti Prakash Gadia, Managing Director, Research in India Limited. Round of applause, ladies and gentlemen. Thank you so much, gentlemen, for joining us for the 15th Capital Market Summit. Over the years, India's capital market has undergone reforms and transformation in terms of standards, systems, operatings, regulations, and so on. And by 2047, India is poised to become a Viksit Bharat. Speedy economic development and adequate capital formation is necessary. And hence, we have this summit. Today is going to be a great day as we have some esteemed guests joining us for this wonderful conference. Before we start today's summit, let me request Mr. Love Chaturvedi sir to please present a bouquet to Mr. Kamlesh Chandravarshne. Ladies and gentlemen, can we please give a huge round of applause? Thank you, Mr. Kamlesh, for joining us. And now, let us begin the summit. I would like to call upon on the dais Mr. Love Chaturvedi, Chairman, National Council on Capital Market and Investors Protection, Asucham and ED, and CEO, Reliance Securities, to please give the welcome address. Ladies and gentlemen, round of applause as we welcome Mr. Love.
Welcome all. Interestingly, the topic of today's summit is Viksit Bharat, but the round of applause is still coming as an emerging economy. Can we hear the round of applause as a Viksit Bharat? There you go. Welcome all to the 15th Capital Market Summit at ASSOCHAM. I would like to give my special welcome to Mr. Varshne to give us the time here and have his presence here. It means to a lot of us. I would like to welcome other dignitaries on the dais, Mrugang, Sandeep, Mr. Gauria, and most importantly, I would like to welcome all the participants who are here in this summit to hear us out about Viksit Bharat 2047. Now, interestingly, it is a very exciting times, especially somebody like us to be here on the dais and talking about Viksit Bharat, talking about where we are today. It couldn't have been more exciting times. If we all know where we are today. We know that we are the 5th largest economy in the world after US, China, now Japan, Germany, and Japan, and then India. We also know that we are the 5th largest capital market in the world after US, China, Japan, Hong Kong, and then us. We also know that we are the 3rd largest unicorn market in the world after US and China. We produce 3rd most unicorns in the world, which is truly amazing. We also know that we are the fastest growing economy amongst the large economy in the world. And I can go on and on what all we know. Now, we have to say that, okay, we are where we are. What is it, the Viksit Bharat? What is it that we are now aspiring for? And what we are is our current GDP, the per capita income of our country is around 200,500 US dollar, is around in that range. To be from an emerging economy to be a developed economy, from the current state to be a Viksit Bharat, it will probably take around 7 to 8 times growth from here to around 15,000 to 20,000 per capita income, which will define us as the Viksit Bharat. We today have probably, if you see in last 5 to 7 years, the capex, the capital expenditure from government has increased by 5-fold. If you see the private capital expenditure, it has significantly improved by 2x over last 12 to 18 months. We have now over 140 million demat accounts, which was never heard before. Truly an accomplishment for the capital market, but still a long way to go. Our tax collections, direct, indirect, especially GST, have been at all-time high. So it is truly encouraging that the direction we are heading probably is taking us where we are aspiring for. An interesting data I would like to reflect upon here today is that where we are today in 2007, that's where China was. We are around 3.5 trillion in the range economy today. That's where China was in 2007. We are around 2,500, 2,600 per capita US dollar GDP today. That's where China was around 2007. Then what happened in next 5 years in China? They became $7.5 trillion economy. Their GDP went up to around $6,000 USD, which is significant growth over 5 years for the economy and per capita. And that's probably, that growth is what have taken them today to the developed economy. What it means is that, truly means is that what is up for us, it's truly exciting. We are destined to be the Viksit Bharat by 2047. We definitely will be a developed economy. We still have lots to do, but with what has been done before, we truly have embarked upon an exciting journey. But as we all know, what brought us here ain't going to take us there. That's the key. It has been substantiated by our Prime Minister, Shri Narendra Modi, by saying that the reforms that are going to come in next 4 to 5 years will probably be something never seen before. And that's probably what is the today's requirement is, if we have to truly get what we are aspiring for. And there are two key things which it boils down to. I would not take much of the time. We have a long day ahead, but I would just the two pillars that probably will take us to where we ought to be. One is the capital formation of the highest order. We are embarking upon the journey from $3.5 trillion to wherever we ought to be in 10 trillion, 15 trillion, wherever the journey is. It requires the capital formation of the highest magnitude, where the capital market is going to play a significant role. And it's better that we do something today to make it happen than to sit and watch and then probably not get where we want to be. And the second, equally important and probably a bit more important in the context, to make this per capita growth a more meaningful growth. What it means is to be more equitable, to be more inclusive, and to make it something which addresses the disparity. So with the disparity getting addressed, with the growth coming, obviously there, I hope, I don't know whether I will be, but I hope that one day I'm sitting in the dais and then we hopefully will be talking about getting to #1 economy. The time will be there. Today, China is talking about that, and we probably will soon be. So with that note, with that exciting day ahead, with lots to discuss today, lots to deliberate, and lots to determine, I would now turn over to my colleague Sandeep, who is a co-chair, and would like him to say a few words. Thank you and Jai Hind.
Thank you, Love. I think perspective is all set well. So I'll not touch upon the points which Love has already shared with you. So first of all, warm welcome to all the members, all the guests here. Special welcome to Vashna ji and distinguished guests at the dais and all the present at the forum. It's an honor to meet and speak to you today. Currently, when we meet at interesting times. The markets are buoyant, and the economy is growing faster and faster. With this fear, I think the numbers were already shared by the Love. The interim budget presented the government's proposed hike of capex in financial year 25 by 11%. The private capex in 23 was the highest in many years. The expectation is that it will rise further as we progress ahead. Domestically, inflation has been largely under control, and this will ensure that central bank softens its stance on the rates for the further growth. The stage is set for the another years of the gains in Indian equity market. But what has driven this change in past 7-8 years? In fact, I would call it as a foundational decade for India's future growth story. Now, I see there are three catalysts which has played a pivotal role taking us here. One is retail investor itself. If you look at the clear hero and a support system for the current bull run and pillar of sustaining the Indian market as our own retail investors. Just around 4 crore demat account in the March 20, we have come to now 14 crore demat account in 24. That's over 10 crore new investors joining the wealth creation journey in India. Retail investors have become a force to reckon. Cumulatively, the group is responsible for inflows of over 18,000 crore in every month. SIP flows of rupees 18,800 for January 24 are up 36% year on year. 7% month on month as December SIP flows to INR 176 billion. We are now close to 80 million SIP accounts in the industry. These numbers itself suggest the robustness of the Indian equity market and the confidence and the trust of our retail customers. The total AUM of the MF industry is well over $630 trillion. Large base investors' awareness and educating the masses of the advantages of investing in equities have shown clear results. Second, the most catalyst, I would call it, the role played by the various stakeholders. The kind of trust by the investors is only possible due to the robust rules and the ease of investing provided by the regulators, special thanks to SEBI, RBI, and other stakeholders in the industry. Stockbrokers, distributors, collectively. This forms the ecosystem. The RBI and SEBI have played an instrumental role in developing the markets, building trust among investors. They have played the role of a business enabler, have ensured the proactive dialogue with all stakeholders and have been receptive of the feedback. The regulator has not only been vigilant, but also strict on lapses of any kind. Superlative technology has ensured strict law enforcement. The same was visible in a recent incidents. I'll not take a name, but RBI was vigilant and took actions also where the lapses were found. We all know how the banking regulators, RBI, have clamped down on a fintech giant. The actions taken were to ensure the regulations being followed and investors' interests are protected. Stock exchanges have ensured the glitch-free platform, thereby attracting higher trading volumes. And the last and the critical role I play is the role of a technology. Without a technology, it was not feasible to take so many investors on board and give them a smooth experience. The equity culture in India would not have been possible without the technology around us, from the share certificate to demat, from physical IPO to online. This process alone has helped reduce the time for filing an IPO to allotment to refund process from a matter of weeks to a few days now. And I can go on and on and on and on and on. I think it seems to be the people who are working in this industry a decade back, they will see that that industry was something different and that today where we stand is something else. The adoption to cutting edge technology has helped investors percolate the equity culture amongst the masses in the deeper geographies. Today, data suggests 71% customers month on month comes from the tier 3 locations. It means the rural and the deep down the India consumers are believing in the segment like equities. The same is reflected well in the data. The shows in the rise in share of B30 AUM, 27% of the Indian equity monthly AUM. This is the mutual fund data I'm sharing too. Technology will continue to play a critical role in our journey. However, with technology come with a risk as well, which system is maybe fully aware of, may not be fully aware of. The deepfakes, hacking, cloning, and breaches related data security. A lot more has to be done to prevent this. There has been development related to policies around data privacy, storage, and confidentiality. However, full-fledged guidelines to influencers remain a gray area, and regulator time and again has working around it to make a robust system. These three pillars have taken us a strong foundation to take Indian economy and Indian investors trust to take it forward. To sum up, while I spoke, about how many investors have made their fortunes by investing in Indian equities, there are also various cases coming to the light, new and gullible investors making heavy losses. Most of these losses are incurred due to the trading in derivatives. I think most of us know about it. And SEBI study has revealed that the 89% of the retail investors in equity FNO make losses. Despite this, the FNO volumes are clocking all-time high every month. It is really hard to explain this paradox. This is primarily due to uninformed investors making an entry into the equities to make quick gains, thereby losing what they have earned. The need of an hour is not to curb derivative. The need of an hour is to create awareness about the power of long-term and disciplined investing, as well as the perils of dabbling the derivatives while there with little to no knowledge. As a stakeholders in the industry, we will strive hard to ensure wealth preservation as the first step and the sustained wealth creation thereafter. Big chunk of the 14 crore strong investors are part-time investors with a full-time day job. Efforts should be made to enlighten these investors on the advantage of and ease of investing in equities, mutual funds, and other investment options. As a fraction of the cost, there are professional fund managers who give the full-time attention and supervision of our portfolios. I would like to end my speech by saying that India has well had its mutual fund SAHIA movement. We now await responsible investing SAHIA movement. Thank you.
Thank you so much, Mr. Sandeep Bhardwaj, for laying a quick framework for us to get started with this summit. Next up, I would like to call upon Mr. Murgank Paranjape, Chairman, National Council on Commodity Markets, ASSOCHAM, and Founder, MD, and Chief Executive Officer, MCX and NEML. Round of applause, ladies and gentlemen.
Respected Varshney, colleagues on the dais, and a great audience here, and very happy to see a full house in this turnout. When you're got so many gray or white hair, and when you've been attending conferences for so many years, one of the toughest thing is what is the topic for the conference. And I think when we decided this within ASSOCHAM, I thought this was a tough one, and I'll tell you why. 1994, my dear friend Mohan is here. We used to wait for the settlement date to be announced. Forget any predictability. We used to wait for when will Patawat be announced. 1997, we hosted Bhaveji for a tour because the first depository was coming up in India, and we didn't even know what not having a share transfer form would look like. I was speaking to somebody today morning, 2001, we launched 5paisa.com, which was probably 20 years before its time. SIPs was unheard of when we were in Prudential. It was a concept which somebody in our marketing team said, this is a good idea, let's try and promote it. And I think commodity derivatives were not even known. So, if you look at our journey of the last 25 years, to talk at a conference of India 2047 is actually letting your imagination go wild. But I think that is exactly what we need to do. And in this journey of the last 30 years, what has helped, I think, in a very big way, is that we have a set of regulators, and I call it a set because I think they all work independently but together, whether it is SEBI, IRDA, RBI, where first and foremost, we look at investor protection, but second, we also develop this market. And in doing so, I think the billion plus, as we keep talking about in India, is what we have unleashed and come up till here. But as we talk of 2047, there are 3 or 4 pointers I would like to leave with this audience as we discuss and as we try and see what we will do in the next 20, 25 years. First and foremost, I think one of the biggest emerging threats which I see, and I see that almost every day in my capacity as, on a couple of boards, every second day we get a complaint about somebody who has been defrauded using cybercrime. Cybercrime is something which I think we'll have to keep finding ways of embattling. And I think as a industry, we have to keep finding ways of trying to make sure that we are as safe a market as we have been, and we continue to be as safe in the next 20, 25 years. The second imperative, and that to me is coming from two factors. Uh, we have made lots of progresses in healthcare and medicine, which obviously means we are going to all live much longer. But with that, and the fact that we still have a burgeoning population, we will need to find better ways of creating innovative solutions for those who do not have a means of income. Whether we call them retirement solutions, whether we call them goal-oriented solutions, I think as a market, these are two things which we have to look for. And therefore, in all of this, just like in the last 25, 30 years, capital markets, I have no doubt, will have a great role to play. What I would love to see in this journey is two things. Love mentioned one of them. And I think somewhere, and Varshniji, I think as a regulator, but as a policymaker, maybe someday we should start measuring median rather than mean. As they say, one hand in hot water and one hand in ice is not comfortable. So if we have to really measure where we are going with our creation of wealth, I think if we talk more about the median numbers rather than the mean will help all of us. And last but not the least, India has and India will continue to be a country made of small business, MSMEs, and the small entrepreneurs. I think our biggest challenge is to make sure that this is the group of people who can access the capital markets safely and at a very affordable price. Those are some of my thoughts. Ladies and gentlemen, I'm sure we're going to have a very engaging day, and I'm sure you're here to listen to some more and eminent speakers like Varshniji. But thank you for indulging me, and have a great day.
Thank you so much, sir. It's always wonderful to have such senior members on the panel. We could not imagine not listening to the terms SIP. It's so prominent these days, all the youngsters. But as we listen to those stories, it's quite interesting and exciting. Can we have a huge round of applause for sir once again? Ladies and gentlemen, it's time for me to call upon Mr. Jyoti Prakash Garya, Managing Director, Research in India Limited. Let's welcome him with a round of applause.
Capital market generally act as a report card for how the economy is performing and what's the thing going forward that way. Just to give you one perspective, whatever the speakers has been saying, we have only invested around 3.8% of the household saving into the equity market right now, and which was 2% 4 years before. तो हमने सिर्फ 2% से 3.8% सिर्फ हाउस होल्ड सेविंग में हमने इक्विटी मार्केट में हमारा सिर्फ हाउस होल्ड से सेविंग वी हैव स्टार्टेड इन्वेस्टिंग एंड लुक एट द इम्पैक्ट whatever the speakers has been saying, look at the impact that it has created in this last 4 years into the equity market. We are not bothered about what FIIs are doing. We are not bothered about what the international community more or less are thinking about us. And most heartening fact is that the world market, the average household spending into the equity market is 28%. We are at 3.8%. 3.8% में हम लोग इतना कुछ कर चुके हैं सर. So this is what I'm just wanting to tell you कि वो जो विकसित भारत सर, तो I think so sir, the 3.8%, if we can just make it around 10% or 12%, and by the flow that it's been coming, and look at amount of SIPs which is coming month on month, that's great in terms of whatever this is there. And in terms of so much of government infrastructure, whatever the private investment which has come out, it has also been spiked by the PLI scheme, which is absolutely phenomenal in terms of increasing the private sector investment which has come up. I'm not talking about any other investment which is like National Infrastructure Pipeline, PM Gati Sashakti, and all these things, which are not only the logistics and the infra development, but also those are the huge government spending which is going to be coming into the economy per se as such. Just to round of applause that we have now the 4th largest stock market in the country, and just to give you one perspective that in US, in all the developed markets, what is happening ki market cap, which is the stock market ki valuation, and the country's GDP, which is around 1:2. यदि GDP 1 रुपए की है तो capital stock market is nearly about 2 rupees, which is there. And we are at 1:1 right now. So in case if 2047, in case whatever the numbers that we are saying, and if we are Bixit, so definitely, sir, we should be 1:2, love bhai, तो 1:2 होना चाहिए. आदि 1:2 जो लव सर ने और सारे लोगों ने जो विकसित भारत की डेफिनेशन दी है सर, तो we have to grow our capital market minimum has to grow at 14% just to achieve this 1:2 ratio. I am not even asking ki our capital market will perform better or whatever that is there. Only thing is that ki in case if we are Bixit, our capital market, which is at present, it is 1:2 in all the developed markets. In case if we only have to achieve that, we will be growing at a rate of 14% per annum. I'm not talking about infrastructural development and also the data and technology. This is, we have the highest number of IPOs, which is much more than China and everything we have compared about China, but how we are overtaking China in terms of the market, in terms of the IPO, in terms of retail participations and everything. Number of demat accounts in terms of internet penetration, affordable. So we have got, sir, approximately people are saying, sir, hum bol rahe hain ki sir, lagbhag around 51 crores are definitely the internet accounts, or definitely that should be opened up in this next 2-3 years of time frame. Now there are 2-3 things, sir, in terms of the suggestions. In terms of, there are 2 things which I wanted to highlight. Was one is the MSME exchange, another is the bond market. I think so there has to be equitable distribution of wealth. That's what the capital market, the next objective is also going to be fulfilled. How the gap between the large corporate and also the SME corporates can be bridged together, and how the debt and equity, because both has to go parallelly, both the debt and equity market has to go parallel, how we can get into the bond market development which is there. So how can we, so there are 2-3 things only for the SME exchange market that we can do. How we can encourage much more anchor investor into the MSME. If you will look into that, those are only the 28 or 30 anchor investors which are only prevalent into the MSME stock exchange market. How we can increase the base of the anchor investor so that more anchor investors try and participate in it was just my radical thought process that similar to like REITs and InvITs, can we have something like MSME REITs or something like that, which can to the MSME say. So and how can we have much more MSME companies so that the larger companies which are taking the larger share of our stock market, how can there be much more equitable distribution of capital market between the MSME companies and the larger corporate, which is the gap is right now is huge, not to mention the numbers also. So how can we at least have ki next time 3-4 years when we meet Vasne sir, we can also have ki sir 60% large cap and 40% of my market capitalization should be MSME. If we can just make it much more like a 60-40 type of an MSME to the large cap market cap, sir. So that will have some sort of a balanced capital market approach to going for forward, sir. We are now concentrating only on the top 2,000 or 3,000 top large cap companies, sir. So how can we have that sort of a balanced approach, sir? This was there. So bond market, I think so. This is where I think so. A lot of work need to be catching up, sir. Approximately around 80% of the fundraising is being done through the debt market route, and 20% it is the capital market, which is the risk, sir. In case if that bond market route or that debt market route is not being properly analyzed and gone through, I think so. Gaadi kahin na kahin puncture hoegi. So we need to be seeing this 80% of the fundraising, which is so much of huge investment which is going to be required. We can't have only one-sided peddling to be done there. US and China collectively constitute nearly 50% of the total global corporate bond market. And India corporate market just represent only 2% of the US market, which is largest globally, which is the US, which is the largest. India's corporate bond market is outstanding at a percentage of 17%, significantly lower than Republic of Korea also, if we hum chote se country ko bhi compare kare, which is at 18%. I'm just giving you some of these stats just to keep you worrying. I really want you so that this is the reason for worrying, and you need to be worried about the fact ki hame kuch karna hoga. And what has also happened ki about 95 to 98% of the private placements which are only happening. So we need to encourage much more public issuance of corporate bond market, which is there. Companies shy away from public issues due to cumbersome process involved, leading to dominance of private placement and minimum retail participation. One-to-one काम हो जाता. There is not much of a public participation which is coming up into the bond market, which is there. They will just go again. Large corporates are only taking all the major chunk of the triple A's, and only the top rated corporates are only garnering the major shares of the corporate bond market. How can the corporate bond market be made much more market friendly so that the MSME companies or little less rated companies are also going and raising money through the corporate bond market also? Many investors, which as insurance companies, pension funds, typically purchase corporate bonds with the intention to hold them till maturity. Again, this is because nobody is going for a trading in terms of the market maturity, trading volumes. This is the institutions dominate the investor base for bonds, which is there, which is the qualified institutional investors, QIB, which are there. Only 2-3 points just to mention was that nearly 70% of the funds which are raised from the primary issuance of corporate bond market are from the financial services sector itself. Again, a manufacturing sector which is not being coming into, which is only 6% of the corporate bond market which are there. How can we try and see that in terms of corporate bond market deeper penetration it can happen? Again, the government debt, which is again raising through the GSEC bond, that is also the trading volume of those are also not there, because whatever the institutional investor which are purchasing the GSEC bonds also, they are also holding it till maturity. So the GSEC bonds are also not being frequently traded there. So not much of a retail participation we are also seeing in terms of the corporate bond market, not even in terms of the bigger awareness also which are being there. So how we can try and do that, that there can be two important things, that how can we have much more public issuances, how we can have the uniform valuation method. Sir, अभी क्या होता है कि आप यदि हर साल लेवा बेची करते हैं तो मार्क टू मार्केट होता है और होल्ड टू मेच्योरिटी का वैल्यूएशन है. यदि आप इसको मार्क टू मार्केट कर दीजिए फॉर वेदर यू होल्ड इट फॉर मेच्योरिटी और एनीथिंग, तो आई थिंक सो दैट विल प्रॉम्प्ट कंपनीज टू डू सम सॉर्ट ऑफ ए ट्रेडिंग मैकेनिज्म. That can be one of the ideas that we can look into it. There can be anything. Lastly, I think so, since the DPAM's secretary will be there, only one thing that he was so passionate about was why the PSU bond. If you look at the PSU Sensex, the corporate governance, which is such an important thing that people have now trusting the government, and with the trust of the government, it has now been नीचे आ रहा है हमारे PSU stocks के ऊपर में, that corporate governance or that trust factor is getting translated. That is why you will see in terms of the market cap of all the PSU companies, the corporate governance, ESG, as all these things are becoming the norms. Thank you so much for everything. Thank you, sir.
Hello. Thank you so much, sir, for covering all the important topics in such great detail through that presentation. Ladies and gentlemen, now it's time for the release of ASSOCHAM and Research in India Knowledge Report. Let's get ready for the release of ASSOCHAM and Research in India Knowledge Report. May I request all the guests? I would like to request Mr. Kamlesh Chandra, sir, to please unveil the report. Ladies and gentlemen, a huge round of applause. Thank you so much, sir. Mr. Kamlesh Sir Chandra Vaishne is here, who will also come here for the key address. Ladies and gentlemen, before Mr. Kamlesh, we have somebody joining us virtually for the summit. Mr. Ruhin Kantapande, Secretary, Department of Investment and Public Asset Management, DIPAM, Ministry of Finance, Government of India, is going to join us through video conference. Can we have a huge round of applause for him? Hello. Hello, sir. Thank you so much for joining us for this summit. We're all very pleased to have you here. Ladies and gentlemen, can we once again hear it for sir? Hello, sir. I hope you can hear us.
Shall I? Yes, yes,
Yes, sir.
please.
Please, sir.
Let me first thank ASSOCHAM for inviting me to a very important event, 15th Capital Market Summit. And the theme is very apt, capital formation for Viksit Bharat at 2047. I thank in particular my previous speakers and distinguished speakers on the dais, Mr. Lav Chaturvedi, Mr. Sandeep Bhardwaj, Mr. Mrugank Paranjape, Mr. Jyoti Prakash Kedia, Miss Padmaja Chundru, Mr. Sundar Raman Ramamurthy, and Mr. Kamlesh Vashne. Thank you very much for the invite. I would like to first begin by, the saying that the interim budget is, has been discussed last few weeks, and this is a budget which has continued its thrust on capital expenditure to boost near as well as medium-term growth prospects and attract private investments. It continues the scheme of helping states to undertake capital spending, and it also takes an important step towards fiscal consolidation in as much as the fiscal deficit is budgeted to fall to 5.1% of GDP from 5.8% of GDP. So it concentrates on growth as well as fiscal consolidation and balances the imperatives of capex. At the same time, expecting the private sector to further accelerate the growth in capital spending. Indian economy, as you're aware, has been one of the fastest growing major economies in the world. And in fact, it is a major engine of growth in the world at the moment, despite the fact that the global growth prospects are rather subdued at this moment. Our capital markets are also in that context are performing well. And that's a very happy sign, because for a growing economy, a very healthy capital market is sine qua non of raising resources. Viksit Bharat would mean actually a prosperous Bharat in harmony with nature, with modern infrastructure, and providing opportunities for all citizens in all regions to reach their potential. And within this, it's like a marathon, and we have to be fit enough to undertake this marathon and continually making us, grow, as well as, making it growth opportunities available for all. Improving quality of infrastructure, enhancing productivity and competitiveness of Indian economy, catalyzing private investments and job creation will continue to be our important goals, as much as improving social infrastructure and improving skills, education, health, and other social needs of the economy, of a growing economy. Now, in this context, I would also like to really say that the capital markets in India have grown very well. We exceeded the $4 trillion market cap for this NSE. Our number of demat accounts has climbed up to more than 14 crores. There was a growth of 26% in 23-24. Since 19-20, the number of demat accounts have grown in multiples. 14% in 1920, 35% in 2021, 63% in 21-22, 28% in 22-23, and 26% in 23-24. And increasingly, our younger generation is quite adept in now participating in capital market, thanks to also to availability of stocks as well as opportunities which are afforded by an excellent regulatory infrastructure, the regulatory as well as the exchanges which have provided, and the other but market participants providing excellent opportunities for investors to come in. And a number of other steps have been taken. I will not dwell upon the number of steps which regulators have taken to go for further, including, for example, improving settlement periods and so on. Needless to say that people are responding to these initiatives with actually their increased participation, including at the retail and HNI level. And in some respects, they are now an important force in the capital markets. Now, I would just like to also dwell upon a little on what in DPAM, for example, we have been trying to look at the whole public asset management. I think it's last 2-3 years we have been actually reviewing the way we have been looking at earlier in a segmented fashion, which we have really now learned to have an integrated approach for our public asset management. Just to give you a snapshot of some of the key data relating to the government controlled companies and financial institutions which are there in the capital market. We have, as a CPSE universe, we have about 389 CPSCs, out of which total parent CPSCs are 162. They have total income of about 31 lakh crore annual income and a net profit of about 2.5 lakh crore. Capital employed about 35 lakh crore. Net worth is about 15.5 lakh crore. Their number of listed CPSCs are 61, with a market cap as of 12th of February of about 35 lakh crore. And if you look at our banks and insurance companies, we have 12 parent PSPs, which I am counting IDBI Bank as well in this. And we have 7 parent public sector insurance companies, including LIC. And we have total income of about, for these banks and PSICs, total income of about 17 lakh crore, a net profit about more than 1 lakh crore, net interest income of 6 lakh crore, and total income of premiums, for example, of insurance companies of about 5.4 lakh crore, number of listed entities 16, and the total market cap as of 12th of February about 24 lakh crore. So if you're really saying that we're talking in terms of about 58 lakh crore as a market cap, which was about 15 lakh crore as of 1st of January 21, which means that the market cap of the institutions under the government control in the market have grown four times in 3 years. Now, this is sort of a value maximization, value optimization policies at work, and of course, the context is also important. We'll have to also grant that the context is a positive context for Indian economy, and driven by the government's policies on, as you say, the pushing growth and also increased capital spending. The quality of expenditure in terms of capital is high. As we know, the investment multiplier of capex is much higher. So therefore, if we are able to push the capital spending, we have, more importantly, a growth in several sectors which are dependent on infrastructure, and also it creates jobs through that investment multiplier. Now, if you really look at it, just to give you a certain ways that we have been promoting this value maximization, value optimization, value unlocking idea. I think fundamental issue is that of performance and governance. And this is important because unless and until they perform and govern, which are reflected in their accounts, that listed entities have to, every quarter has to come out to the market with their, I'll just let you know, some of the steps that we have taken in terms of, providing them, this kind of impetus for governance. We have something called an MOU framework for CPSCs, where companies are evaluated and they have certain links to their performance incentives. There are some of the key performance parameters which have been included are relating to CapEx, export and import as percentage of revenue, EBITDA as a percentage of revenue, return on net worth or return on capital employed, asset turnover ratio, expenditure on R&D innovations as a percentage of profit before tax, and so on. The second important part is, their sort of communication of that performance, because performance is important, but they must also continually, communicated with the markets. The third important thing is a consistent dividend policy. And this consistent dividend policy is predicated on the fact that, the returns are of two kinds. One is an annual return, another capital gains, and both are important. Dividends, consistent dividends are an important factor in the investors, including government and others, of performance, expecting continued performance from the CPSCs. However, the dividend policy is not maximizing dividend. I think what we have really said that is a balancing. While they should give the dividends, but at the same time, they must have sufficient plowback in terms of growth of the companies, taking up newer projects, because they must also graduate to higher level of top line and bottom line, which is not possible without growth. The fourth imperative of this is the other capital management measures. Our CPSCs have granted bonus shares, they've given buybacks, the splitting of shares have taken place. The cash, idle cash is not really allowed to sit idle, and it is meant for shareholders, or else it has to plow back. Now, avoiding policy shocks is another one, is that we're trying to sort of have consistent government policies which do not unnecessarily, adversely affect their prospects of growth. And calibrated disinvestment strategy, which is contingent on a holistic dividend disinvestment and dividend returns, instead of merely focusing only one of the aspects. And this has been, I think, a very key issues that, as you know, that roughly about last year, for example, we had about 93,000 crore, flow back to the budget from both dividend and disinvestment put together. But of late, for the last few years, disinvestment is just taken as just one way of management of equity. It is actually basically disposal of equity. But at the same time, we have returns which flow to, if we remain in some way, as there are returns in terms of dividend, which were actually which comes as a non-tax revenue, but which was never emphasized. For example, if you just give you an example of the non-tax revenue in the budget have increased by 75,000 crore over the budget of 3 lakh crore last year. And so expected is about, RE figures are about 3.75 lakh crore. In next year, BE, the figure is about 4 lakh crore. So a substantial amount of resources actually accrue to the budget from the non-tax revenue as well. So therefore, disinvestment is just, which is a capital receipt, is one of the things, and there is also the other side. I think taking into consideration these factors where we aren't really chasing a target which may be sometimes distorting the markets, also creating, concentrating on value optimization and a slow and gradual exit of the government in terms of providing stocks to the market and constraining oversupply and also creating a more congenial environment for stock markets to operate. We have this, as a holistic public asset management strategy, which I've outlined of various elements. And therefore, we have also done away with a specific disinvestment target in this interim budget. Also, we've not announced any specific disinvestment target. There would be other receipt under the miscellaneous capital receipt and accounting entry, where we would be garnering such kind of miscellaneous capital receipts, which may come not only from disinvestment but also from asset monetization, to the extent this asset monetization resources accrue to the government consolidated fund. In many cases, asset monetization resources get plowed back to the accounts of the concerned companies for their future capex. To that extent, they are accounted for in the government budget. That will also be clubbed with that other receipts. This particular stance is based on this realization that we have to operate in this market in a calibrated way. It doesn't mean that actually we have shed disinvestment as a policy. In fact, listing has been one of the very important policy measures that the government has taken since 2017, 2014. We have listed 18 companies, including the last one, the LIC, which was the biggest IPO in history of the Indian stock market. So therefore, unless and until we list, unless and until we, provide that stocks to the market, we don't deepen the stock markets. And certainly, it also helps in improving our companies. Our listed companies have performed way better than the unlisted companies that we have. So that's a very important reform imperative per se. But dilution of stocks in the market has to be based on a certain principles which are, consistent with the stock market philosophy, and they should not create any price overhang, and neither we should also sell cheap just to really get it, immediately. So the question is, in the sense of timings, we have to be slightly, medium to longer term player rather than a short term player of trying to exit very quickly from the market, because we know that beyond 51, we won't be able to then further dilute unless and until we completely privatize. But whereas focus has been that public assets continue to perform well, they continue to give value not only to government but also to the minority shareholders. And this orientation for minority stockholders has been, over the last 3 years, we have done everything possible to see that the minority shareholders, we see their faces when they take decisions. And it's very important. And that is what we are trying to instill in our managements of all our boards, in our companies and others, this principle that it is a partnership after all. It's not really a one-sided thing. And therefore, we will do a far more better job in capital markets if we have this approach of keeping the interests of minority shareholders in their mind. So improving governance, consistent dividend policy, communication, avoiding policy shocks, a holistic view of disinvestment, dividend, and so on, is all in the in the whole gamut of the ideas which actually subserve this purpose. So I would, like to end here saying that, we wish the capital market participants in all others a very, very happy days to come as well. We would say that, I would say that, we require a lot more private sector companies to come in. Also, if public sector companies are there, which we can list them, to come to the market, raise resources, because I think Indian economy going forward will require a very, very large number of stocks, of very large number of well-managed companies coming to the market, raising resources, because that's how, the capital investments will take place, which is very important for accelerating growth for our economy for a very long period of time. And most of the projections are that Indian economy will grow over a long period at 6.5% or more. And this will mean that we will require capital markets and financial markets also, doing all that they can do in order to achieve this growth for Viksit Bharat. Thank you very much.
Thank you so much, sir, for a great insight that you provided to all of us. It truly was very encouraging. It is exciting. And I think you have very humbly summarized astronomical performance that we had over last 4 to 5 to 6 years, especially when you said a 4x increase in the wealth over last 3 years is something that actually I don't think we ever would have heard about in the history of any capital market, sir. And it's truly aspirational, it's truly humble, it's truly exciting that we are embarking upon a journey where we have been provided an opportunity, sir, to participate for the retail, for the common people, to participate in the growth story of the country, of the public sector, so that they can all, create their respective wealth as the public sector units are growing. Sir, in the just one question, if I may have, sir, on behalf of the audiences here. I'm pretty sure that everybody would be wanting to know that, currently, as you rightly said, sir, that there are LIC and there are a lot of other opportunities that came to the retail market, to the capital market for all of us to participate. What is your vision, sir? That will more and more companies will come, will be listed. You also mentioned, sir, that apparently the listed companies are doing better than the unlisted companies. So hopefully, getting them to the capital market will also propel the performance. And performance and governance are the two pillars that you mentioned already as the key to evaluate. But just, sir, what's your vision? What's your thought process on getting more and more such companies list and for all of us to be able to participate in that growth story, sir?
I think there is a lot of opportunities for the subsidiary units of some of our important companies to come to the market.
Okay.
You may be aware that a very swift transition is taking place even in our energy space. Most of our energy companies which were earlier based on carbon are becoming increasingly green, and the way they are doing is through creating subsidiaries for the green assets, and there is a very tremendous growth prospects, and they are actually growing very fast in terms of the green assets. So those are the kind of things which will come in. We have first created this model where we have asked them to create green subsidiaries, and they have brought in the assets which were earlier green as a part into hived into those things. Then there is a further growth which is taking place of either their subsidiaries or a step down subsidiaries, because in many cases, you have to do the JVs with states and so on. Like for example, pump storage, if you have to do, then you have to have water bodies, and these water bodies are typically with the state government. So you can have a JV with the state government, create the availability of space for doing all those projects, and then sort of execute it through your subsidiaries and capitalize them and do that. And now their capital requirements, they could actually come back to the capital market, but also some of the monetization, they could do it through the capital markets through an IPOs. I think that's the model which will there. We have actually have almost all oil companies, coal companies, we have got energy companies, they have now subsidiaries on green. So you have one set of those things will definitely will be coming. Yeah.
Great, sir. I think this gives us a lot of excitement to coming in this space and more of the LICs and maybe bigger and better. And again, sir, thank you so much from bottom of my heart on behalf of all the audiences for you to give us your time and your views. Thank you so much, sir. Jai Hind. Thank you, sir.
Thank you so much. Now, ladies and gentlemen, we have Mr. Kamlesh Chandra Vashne, whole-time member, Securities and Exchange Board of India, joining us to deliver the key address. Let's give him a huge round of applause.
Thank you, SOCHM, for inviting me to share my thoughts on very important topic that we have for today, capital market for Viksit Bharat. Really grateful to hear all the thoughts that previous speakers have shared, secretaries have shared. In fact, that has covered all the spectrum, how we can progress to align ourselves, our capital market, with the aim that we have for 2047 as a Viksit Bharat. We'll try to, give my thoughts on some of these aspects. But first of all, a few numbers which have already been shared by others, but also let us look at those numbers to see how we are performing in the capital market and how do we have to take the next step to be able to say that we are ready, that our capital market is ready for the Viksit Bharat. It was earlier spoken by the commentator, by the earlier speakers, that how capital formation is going to play a very important role. And when we talk about capital formation, we can see that the growth in the capital market has been phenomenal. We have already talked about total number of DMATs accounts, which are 14 crore, and the growth is 20% in last 10 months. Similarly, unique DMATs accounts are 9.5 crore, which is again has seen growth of 20% in last 1 year. Now, this is something which is very heartening. And not only the amount, the number that we are talking about, if we go down into from which cities these numbers are coming in last few years, that is more heartening because it is coming from tier 2 and tier 3 cities. Now, when we say that it is important, because when we see Viksit Bharat in 2047, it is not only the GDP, the per capita income that is important, it is also important that each and every Indians are part of that growth story. Each and every Indian is enjoying the fruit of development. So to that extent, when we see in last few years, it is the small investors from tier 2, tier 3 cities are joining capital market and enjoying the growth that we are seeing in capital market. That is something very, very important for development of India and for development of capital market. When we talk about mutual fund, we have 4.3 crore unique investors in mutual fund, which has again doubled in 4 years. So that's a substantial number. So when we say double in 4 years, it is also in line with what previous speakers have spoken, that if we have to be at 2047 a particular amount of GDP, and uh, our market capitalization at twice the GDP, which at present is 1.35. I think my understanding it is 1.35, not 1:1. So if it has to be twice the GDP, then we have to grow at a particular pace. Now, these numbers are showing that we are already growing at that particular pace, but can we grow for next 25 years at that pace? So that is very important. And what Secretary Sir also referred to was that it is a marathon race. So it is not a sprint, it is a marathon race. For next 25 years, we need to continue to grow at that particular pace. Similarly, when we see fundraising in equity has also doubled in last 4 years. AIF fundraising or InvIT fundraising are all at all-time high. Yes, debt market is probably one area where we need to do better. It was already pointed out earlier by one of the speakers, Mr. Gadia, that in debt market, probably we are lagging behind. And in fact, if we see cumulative corporate debt as a percentage of cumulative credit, bank credit, it has gone down from 65% to 52%. Now, that is one area where some steps have been taken in the recent past. And definitely, whatever suggestions as we receive and consultation that we have from market participants, whatever steps are required to be taken, those steps would be taken for debt market as well. I have gone through some of the topics of this particular conference for today. Very interesting topic, role of disruptive technology, enhancing transparency and accountability, unlocking new investment areas, and challenge and solution for long-term sustainability. Now, these are the topics which are going to throw up new ideas. Like Mr. Pranchpe said, 25 years back, we could not imagine what we will be in 2024. Similarly, what are the new steps? What are the new avenues that will emerge for capital formation, for growth of capital market in next 25 years? We cannot imagine. But through these discussions, these innovative ideas are going to come out. And therefore, this conference, these discussions, consultations are very important. And we at SEBI are always willing to be a part of this journey to enable business to grow, to capital market to grow. Whatever constructive suggestions are there, that will always be welcome by the regulator. There is one area which I would like specifically to touch, which in my view is a critical path. So when I say critical path, means everybody is doing their part to ensure that we have a robust capital market, particularly, which enable India to form capital for 2047 Viksit Bharat. Secretary Sir has outlined various steps which government has undertaken. We at SEBI are also have taken number of steps. You as a stakeholders are also contributing your bit in developing capital market. But will all of that be enough? There is one area which I think we all need to focus on is trust of investors. That was touched upon by Mr. Gadia, by Mr. Sandeep in his speech. I remember that trust of the investor is very important. I think for me, that's the critical path. Because whatever we are today, it is because the investors have trust in capital market. If that trust is broken, then all this growth story will get hurdles. We, SEBI, have an enforcement mechanism where whenever we see that there are manipulation going on, which is going to affect the integrity of the capital market, which is going to hurt the trust the investors have in the capital market, we intervene and take corrective steps. Enforcement is important, but enforcement cannot be the only solution. ultimately law is implemented through voluntary compliance. Enforcement is only where to give message to the participants that the regulator is watching you. Enforcement cannot be against each and every violation. These violation needs to be corrected through voluntary compliance. For example, if we see that on a television channel, guest experts are giving advice to manipulate the market, we will enter the picture, of course. But before that, it is a responsibility of the TV channel to see whether the guest experts they are inviting are giving advice in a transparent manner or there is some manipulation going on. They may not have enforcement power like us. They may not have surveillance mechanism, surveillance tools like we have, but they can do smell test. They are right at that particular space. They, through smell test, can know that something wrong is going on. Similarly, we have seen a lot of front running in AMCs, in AIFs. Managers in these companies can definitely have a smell test, can definitely have control mechanism to ensure that their employees are not doing any front running or doing any other manipulative schemes. Now, these voluntary compliance are going to play a very important role in ensuring that investor trust is not affected. So this particular item, while we will keep on brainstorming to see how we need to develop capital market for 2047, this is the critical path, and we all should keep that in mind, that we should take all steps at our own level to ensure that investor trust is not affected. Now, this is not a prescription from SEBI. I mean, it's not that SEBI is going to come out with some kind of a prescription. This is all voluntary compliance that we all need to do, because when we look at India growth story today, we feel very happy that we are doing very well, much better than what all other countries are doing. Imagine in 2047, when we look at Viksit Bharat, when we look at Viksit capital market, we all will be proud of. But at that point of time, there should be another satisfaction for each one of us that I have done my contribution for making this Viksit Bharat, for making this Viksit capital market. And therefore, it is very important that all of us keep this important point in mind and do our bit to make India a Viksit Bharat and capital market a Viksit capital market. Thank you very much.
Thank you so much, sir. Now it's time for me to invite Mr. Love Chaturvedi, Chairman, National Council on Capital Market and Investors Protection, ASSOCHAM and ED, and CEO, Reliance Securities, to please come and deliver the vote of thanks. Let's welcome him with a round of applause, ladies and gentlemen.
What an amazing session this has been. The insight from our Honorable Secretary, Mr. Pandey. Really, sir, it was really interesting to hear your very brief but very crisp and very straight to the point, substance on what it will require to take where we need to go, and with the trust, and one of the very important things, sir, that I took out of it is the word voluntary. If we each do what we are supposed to do, then nobody can stop us to reach where we has to reach. It's just that it has to come from within. And thank you so much, sir. And thanks to Magank, always sharp, always taking us back to the reality, what it used to be once upon a time, just so we always have a perspective. Mr. Gadia gave us good perspective of a few areas where we're still lacking and some of the opportunities, even at the, I do agree, sir, 1:2 should be the bare minimum and probably plus. There is no disconnect. And Sandeep, as always, reflected on the retail market resilience. Actually, one interesting data points to add to the Sandeep's point was that up until 10 years ago, any FPI outflow of around $10 billion or so would probably mean the market will crash by 30%, approximately data point. Come to today, even with the around $30 billion of the outflow, may not cause market to go down. In fact, historical data has suggested that it may go up by 5 to 10%, and that is the resilience of the retail. That's the resilience of us. That's correct. So we have come up a long way, and we have to go a long way. And with that, I would like to thank ASSOCHAM, Dr. Rajore, all the sponsors, and again, most importantly, all the participants. Thank you. God bless.
That has been a great inaugural session. Ladies and gentlemen, can we have a huge round of applause for all our guests joining us today? It was a pleasure to have all of you all, gentlemen. I request everyone to please be seated because we're about to get started with our panel discussion number 1.